Hello and welcome. You're watching World Business Report here on News9. I'm your host, Suyash Maheshwari. As a holiday spirit takes hold, the markets reflected a mixed sentiment at the Wall Street. Key indices like Dow Jones slipped fractionally, while S&P 500 and Nasdaq each gained about 0.2%. Investors are now navigating through a blend of optimism and caution, resulting in varied performance among major stocks. Take a look.
U.S. stocks gyrated to a mixed close on Friday as investors headed into the long Christmas weekend after digesting cooler-than-expected inflation data that firmed bets the Federal Reserve will cut interest rates next year. The Dow dipped fractionally, while the S&P 500 and Nasdaq each gained about 0.2%. All three indexes notched their 8th consecutive weekly gains, the longest weekly winning streak for the S&P since late 2017. The benchmark index is now within 1% of its record close reached in January of 2022. Breaking that level would confirm the S&P has been in a bull market since a low hit in October of that year. But bumpier times could be in store, says Philip Colmar, managing partner and global strategist at MRB Partners.
The market's been rallying for weeks now on really exiting 2023 on the back of optimism around the Fed and its pivot towards an easier policy. And so while I think that that's been positive, a lot of this Goldilocks scenario is now in the markets, both in the bond market and the equity market. So opening 2024, probably going to be choppier as we start to digest that.
In economic data, the Commerce Department's Personal Consumption Expenditures, or PCE report, out Friday, showed inflation continues to ease down toward the Fed's average annual 2% target, reinforcing the belief that the central bank could begin cutting rates as early as March. In company news, shares of Nike tumbled 12% after the sportswear maker trimmed its annual sales forecast due to cautious consumer spending. Peers Foot Locker and Dick's Sporting Goods shed 2.7% and 3.9% respectively. And Karuna Therapeutics soared nearly 48% in the wake of Bristol Myers Squibb's agreement to acquire the drug maker for $14 billion in cash. U.S. markets are closed Monday for the Christmas holiday.
Now, the debate surrounding around the Federal Reserve's objective intensifies. Should the targeted inflation rate remain fixed at 2%? Now, analysts and experts delve into the implications, weighing the advantages and potential drawbacks of maintaining this benchmark amid evolving economic landscapes. Take a look.
The given in many ways by the Fed and financial markets is that all roads lead to 2% inflation. I think there's a real debate. We saw that 2% was prevailing last decade, and that's kind of where people get the anchoring of this 2%, as well as it's the Fed target. However, it was anchored last decade because we had some very potent forces dampening inflation. We had just exited one of the biggest housing busts of all times, and we had the household sector rebuilding its balance sheet. And when it was doing so, it meant it was consuming less, and that's the biggest chunk of GDP. So inflation was dragged down by deleveraging forces. We also had intense globalization for much of that decade up until the trade wars started to pick up, and there was technology dampening forces in inflation. So while we might have hit 2% for much of the 2010s, it's probably not characteristic of equilibrium. As the decade ended and before the pandemic started, we started the underlying trend of inflation actually drift more up to 3%, whether you looked at trim mean or median or other types of measures. And so this is symbolic of the fact that actually equilibrium for the U.S. economy may not really be 2%. The Fed might have a goal of 2% or a target of 2%, but it may not be the target, or it may not be the actual equilibrium. And if that's the case, the only way you end up at 2% again is if we're in the midst of a recession. Now, the Fed doesn't want to orchestrate a recession. Eventually, a recession will come about and will periodically be there. But the Fed's goal is really to avoid recessionary outcome, which also puts in question, beyond any kind of near-term base effects for a few months, puts in question that 2% level.
Now, Tesla encounters fresh hurdles in its journey as the company issues another recall grappling with ongoing safety probes. Amidst heightened scrutiny, the electric car giant faces mounting challenges that can impact both its operations and market perception. Take a look.
Tesla will recall more than 120,000 vehicles in the U.S. The news comes on the heels of another massive recall just last week and amid 2 overseas safety investigations. The National Highway Traffic Safety Administration on Friday said the latest recall is due to the risk of its car doors unlocking during a crash. The recall affects 2021 through 2023 Model S and Model X vehicles, which fail to comply with certain federal safety standards for side impact protection. NHTSA said Tesla has released an over-the-air software update to address the issue. 1 week ago, Tesla recalled over 2 million vehicles in the U.S., its largest recall ever, covering nearly all of its cars on American roads. The move was done to install new safeguards in its autopilot advanced driver assistance system after a federal regulator cited safety concerns. Meanwhile, Sweden's transport agency on Friday said it is investigating suspension failures in Teslas in a probe similar to that carried out by regulators in nearby Norway. A day earlier, the Norwegian Public Roads Administration said it began questioning Tesla more than a year ago, asking the automaker to assess consumer complaints about lower rear control arms braking on its Model S and Model X vehicles. News of the Swedish and Norwegian inquiries follows a Reuters investigation published on Wednesday that exposed how Tesla has blamed drivers for frequent failures of suspension and steering parts that it has long known were defective. Tesla did not immediately respond to a request for comment.
Now, Nike, a stalwart in sportswear industry, faces market turbulence as its shares take a considerable tumble subsequent to a downward revision in its sales outlook. Now, the abrupt shift in projections triggers ripples across the market, prompting investors to reassess their positions.
Nike shares tumbled Thursday, dropping around 11% in after-hours trade. The slide came after the sportswear giant cut its sales outlook for the year. It now expects revenue to grow around 1%, when it had previously predicted growth in the mid-single digits range. Analysts had also expected a much stronger number. At just under $13.4 billion, second quarter revenue also missed estimates. Nike blamed cautious consumers. The firm said it was seeing a reluctance to spend in markets around the world. In the key Chinese market, sales have slowed as the economy showed signs of stalling. It's all forced Nike to do more promotions, which eat into its profit margins. The company plans a range of new products to revive consumer interest, saying innovation would be key to overcoming a sluggish market. The firm also said it was looking for $2 billion in savings over the next 3 years. Among other steps, it will cut some management layers and increase the use of automation.
This week's numerical revelation hints at an imminent transformation, signaling a potential shift in various sectors, from sweeping changes in Argentina to why Google has a payout for US consumers. We round up the big stories in the business and finance. Listen in.
From sweeping change in Argentina to why Google might give you a refund. This is the week in numbers. Over 300 is how many economic reform measures Argentina's new president put in one decree. Libertarian Javier Milei wants to slash bureaucracy and shrink the state. But the prospect of deep cuts to public spending has sparked protests. $2.7 billion is the fine faced by Binance in the US. Former boss Changpeng Zhao will have to pay millions more. It's all part of a deal to settle a years-long probe into the world's biggest crypto exchange. $700 million is how much Google will pay to US states and users of its Play Store. That after it settled an antitrust case that alleged it had overcharged consumers. Individuals can get money back, but it may only be around $2 per person. 74 years was how long Toshiba shares spent on the Tokyo Stock Exchange, but that came to an end this week. The conglomerate was delisted after being bought by a group of investors. Where it goes next is unclear, but analysts expect asset sales and a focus on high-margin digital services. And $14.1 billion is how much Nippon Steel is paying to acquire US Steel. That gives the Japanese firm a much bigger presence in the US market, but some analysts say it's overpaying for the deal. Some US lawmakers also look set to oppose the move.
Now, concerns mount over the UK economy as it contracts in the third quarter, fueling apprehensions of an impending recession. Analysts scrutinize the data, exploring the potential implications and seeking measures to navigate these challenges in the economic waters. Take a look.
Britain's economy might be in recession. Data released Friday showed it shrank between July and September. The country's Office for National Statistics, or ONS, said gross domestic product contracted 0.1% in the third quarter. It had previously estimated the economy was unchanged from the previous 3 months. In another reading, second quarter GDP was now estimated to have been flat, down from a prior estimate of 0.2% growth. Economists were split on whether the third quarter contraction would prove to be the start of a recession, as defined by 2 consecutive quarters of shrinkage. The data comes one day after Finance Minister Jeremy Hunt commented on the central bank's interest rate decision, an unusual move in British politics. Hunt said the Bank of England might decide to start reducing interest rates if inflation keeps coming down. The bank has said it is premature to talk about cutting rates, although financial markets have bet the bank rate could fall as low as 3.75% by the end of next year, down from its current 15-year high of 5.25%. Hunt said Friday the outlook for the economy was not as bad as the numbers suggested, while the ONS said the broader picture for the economy was one of little change over the last year.
Now, China implements stringent measures aimed at curbing excessive spending on gaming activities. The newly introduced regulations seek to rein in extravagant gaming expenses, signaling a shift in the country's approach to entertainment consumption. Listen in.
China has made strict new rules for its multi-billion-dollar gaming industry. Regulators want to curb spending and rewards that encourage video games. Online games will now effectively have spending limits and face bans from giving rewards to players if they log in every day. Rewards also can't be given to anyone who spends on the game for the first time or if they spend several times on the game consecutively. The decision spooked investors and dealt a blow to the world's biggest games market, which returned to growth this year. Shares in gaming giant Tencent were down as much as 16% Friday, while its closest rival NetEase was down by a quarter. Beijing has taken a tough line on video games over the years. It set strict playtime limits for players younger than 18 2 years ago. It also suspended the approval of new video games for about 8 months, citing gaming addiction concerns. Last year was China's gaming industry's most difficult year on record, as total revenue shrank for the first time. The crackdown formally ended in 2022 as new game approvals resumed. China's video game market returned to growth this year as domestic revenue rose 13% to $42.6 billion, according to industry data.
Now, navigation routes alter as more shippers divert away from the Red Sea, triggering an unexpected surge in oil prices. Now, the strategic rerouting impacts global trade dynamics, highlighting the far-reaching consequences of shifts in maritime navigation. Listen in.
More shipping companies are set to avoid the Red Sea following attacks on merchant vessels by Houthi militants. German container line Hapag-Lloyd is among the latest to say it will steer clear. 25 of its ships will be rerouted before the end of the year. Hong Kong's OOCL is making a similar move. Ships will have to take longer routes to avoid the hotspot, and that could roil supply chains worldwide. The Suez Canal route accounts for about 12% of global trade. Costs will jump too, with the price of shipping a container from China to the Mediterranean up 44% just this month. Experts say anything that is moved by sea, from toys to food and clothing, could be at risk. Concern over disruption to supplies is driving commodity prices higher too. Metals prices rose Friday, as did benchmark oil prices. Crude jumped around 1%, though traders say the impact on supplies should actually be limited. Relatively little oil is shipped through the Red Sea. Much now depends on the International Naval Task Force being set up by Washington. The Pentagon says over 20 countries have signed up to take part, though some did not want to be named. Vessels from the US, British and French navies have already shot down Houthi drones in the area. On Thursday, UK Foreign Minister David Cameron met his Egyptian counterpart to discuss the crisis.
It's absolutely essential that those maritime corridors, that the free movement of ships, of goods, of manufacturers, of oil, of world trade, that they keep going.
The crisis grew out of the war between Israel and Palestinian militant group Hamas, which runs Gaza. Yemen's Houthis have threatened to target all ships heading to Israel in response.
With that, let's take a short break, but stay tuned with us as we have many more stories to cover from the world arena on the other side.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है Money9। आजादी पैसे की, अभी डाउनलोड करें।
Embark on a captivating journey as Slovenian nativity play unfolds its timeless tale within the intricate depths of limestone caves. Now, this unique staging adds a mesmerizing dimension to the traditional narrative, captivating audience with its extraordinary setting. Take a look. Transport yourself to the heart of Parisian architecture through the delightful and innovative renditions of iconic buildings in the form of Yule logs. Experience a tasteful celebration of art and culture through these culinary creations. Celebrate the winter solstice amidst the ancient wonders at the legendary Stonehenge site. Revelers gather to mark this celestial event, embracing tradition and spirituality against the breathtaking backdrop of this iconic monument. Take a look. Experience the festive cheer as Santa Claus takes an enchanting plunge into Rio's vibrant aquarium. Adding a whimsical touch to the holiday celebrations, the Merry Fishmas event delights audiences with its unique and joyful spectacle. Take a look. Amidst the holiday season, a heartwarming gesture unfolds as a German singer orchestrates a Christmas dinner extending warmth and support to the less fortunate. This thoughtful act embodies the true spirit of giving during this special time of the year. Take a look. And that's all we have in this edition of World Business Report. This is Suyash Maheshwari signing off.
Yes, the scale of the attack surprised us. When you get a